This is the Friday, February 5th, 2016 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
We're glad to have you. We didn't get a chance to discuss the cotton market on the program. Down $1.16 this week. Just more bearish international news for cotton.
You kind of broke out the bottom side. You know, there's pretty good support on that cotton market at 60 to 61. When you broke out the bottom of that, I think it just confirms that we've got more trouble. And once again, we had a market that broke out the bottom at a time after the dollar broke, you know, which you'd think would be supportive of cotton too, and it wasn't. Now, you have to say about cotton is that they're really caught up in this turmoil in China. Almost all of our cotton exports are to China, and if you got problems in China, I guess it's not a huge surprise that cotton's going to suffer. And I think that's what you've been seeing happening here when it started breaking down that's when it started breaking out through the bottom side.
Okay, so we're just looking at until things turn around or something fundamentally changes, probably a lot more downside pressure.
I don't know if there's a lot more, but again, I'm repeating myself, I guess, but I'd be selling any rallies that came along.
Okay.
Cotton for sure back up in that probably 61.5, 62 range, the area that had been support.
Okay.
It's probably going to be resistance now.
Sure. All right. Well, now we want to jump into, get your thoughts a little bit in better detail. Laura in Indianapolis is wondering, is the bottom in for beans and meal? You said no on the program. Looking at $7.75 maybe. Are you anticipating that as a harvest price for beans?
Well, yeah, I am. But I also think old crop beans are going to, in the next 60 days, are going to make new lows again.
Okay.
Again, we're harvesting a South American crop. The Brazilians are probably going to have 100 plus, maybe as high as 105 million metric ton. The Argentinians probably going to have around 60. I mean, their currency is substantially lower than ours. Their price, I mean, Brazilian beans are what, 32 cents under U.S. beans. The meal sales have been abysmal. At some point, that's going to be a problem. And I think you started to see it roll over a bit this week, and it's going to be really interesting next week to see if there's follow-through on that selling. We've had some nice up. There was some weather concerns in Brazil and Argentina both that kind of propped us up a little bit there for a while. But I just think this WASDE report next Tuesday is going to be another confirmation that we just have a lot of beans around the world and in the United States.
Right. And usually we can count on a Brazilian port strike, but with this sheer number of soybeans out there, might not have much of an impact this year.
I know. The only thing that to get excited about maybe, and it maybe just all it'll do is hold new crop beans up is if there's some planting delays, because like you said in the show earlier, everybody's got pretty good subsoil moisture, which also means it's a little wet in some places. So that is a potential. They might plug in some weather premium into the new crop because of that.
Okay, but the trend again pointed to the downside.
Yeah, and the U.S. farmer's sitting on huge quantities of beans that they don't know what the heck to do with, because it's not rallying high enough to get them a price that they can sell above their break even in most cases.
But that being the case, still say sell? Get them out?
The world doesn't care what your break even is. I'm sorry, but it doesn't. I mean, that's important to you, and when you had a chance to sell at that, you probably should have been selling. But for now, I don't think anybody cares. You're waiting. If you're holding out for that, you're waiting for some big weather event to bail you out.
And that's hope isn't a marketing plan.
Nope.
And better to sell 40 cents under than $1.30 under.
Well, I've always said that's one of the tricky things about being in agriculture and marketing. And in any business, really, is it's always a difficult decision to know when to switch from profit maximization to loss minimization. And that's kind of what we're talking about here for a lot of guys.
Okay, a shift in mindset.
Yeah.
We've got a question here from Paul in Columbus, Wisconsin. We touched on it briefly. He says, with the recent drop of the dollar, crude goes up with a large inventory. Why do grains drop? Shouldn't they also go up? And then he mentions, and this is the interesting part, funds bought 40,000 plus contracts and the price moved a penny. we've seen similar huge buy orders from outside investors with minimal response in the markets. What does that tell you?
Yeah, the corn market, they've covered half their short position, and they had a huge short position. They've bought back 120,000 contracts or more of corn, and we got a 20-cent pop out of it. That tells you got a market that's pretty darn weak. And the fact that we couldn't rally this week when the dollar dropped 2.5%, another confirmation in my mind that you got a market that's not that strong. And granted, it maybe makes us a little bit more competitive, but the reality is still, like I said, Brazil and Argentine currencies are still substantially weaker than ours. That's why you don't get much response from a little sell-off in the U.S. dollar.
It'd have to be a substantial sell-off in the dollar, 20% or so, to get us back down in the ballpark.
Exactly.
Okay. Final question here for you. Todd in Rice Lake, Wisconsin, is asking about something we mentioned on the show. He wants to know, will the ChemChina buyout of Syngenta impact the market at all?
I don't know that it'll impact the market. I guess I don't see why it would, except that if that all of a sudden becomes a funnel through which better hybrids, better technology flows from us to them and helps increase their production. In the long run, it probably is a negative for us. In the short run, I don't think it matters. The interesting thought that crossed my mind was the fact that U.S. farmers are suing Syngenta because of a Chinese blockage of technology coming into China, and then China buys the company that was responsible for that, and it just makes it kind of an interesting.
Is China going to have to write the check should that suit go forward for corn they didn't buy in 2014?
Exactly.
So now, there's been a lot of talk about that lawsuit. Now it could get interesting. Have you heard much about it?
I have. I've heard that Syngenta is beginning to send attorneys out, taking depositions from people, specifically asking how do you quantify the damage that you're saying that you had in your lawsuit against us? How do you quantify that? And number one, I didn't think anybody should sign up for it. I didn't think it was worth it. I didn't think it was a good idea, but. How many farmers really have the ability to sit down, analyze that, and quantify it, and tell Syngenta what their real damage was in that lawsuit? I just think it's going to be really interesting when guys start getting called in front of to give depositions on
So it
that.
isn't just a class action, sign your name up, get the check if they win.
No, it's not. It's you're filing a lawsuit and you can be deposed over that.
Okay.
At least that's my understanding.
Gotcha. Things to keep an eye on. Maybe give it a little thought when you get those mailers in the mail.
I mean, I'm just an observer, and I'm obviously not an attorney, but that's from what I've been told, that's kind of what's going on.
Okay. Now, one other thing we want to talk to you about was the crude market. We've seen a lot of volatility, but it's small-time volatility when you're down here hovering around $30. If we're going to get a breakout, is it to the upside or the downside?
Yes.
Where do you
It's
see
going to
it?
be. It was kind of an interesting week in crude oil. We had another big jump in inventory, both in crude, gasoline, and ethanol, all three of them. But and the rig count. But the rig count has started. Well, it's been dropping, but we're down like 1,111 rigs, something like that. I mean, it's substantial drop in just a year and a half. And despite that, we've continued to have U.S. production go up. Well, it actually went down a little bit this week, only 0.2%, something like that. Not a big deal, but I think it's starting to show that this lower price, in combination with this reduced rig count, is starting to have some effect in reducing production. That's number one. Number two, we had this big dust-up where the Russians said, we're going to call OPEC and we're going to have a meeting with us and we're going to get together and we're going to cut production by 5%. And I said poppycock at the first time I heard it, because it just said, well, number one, they couldn't hardly even get a meeting with OPEC.
Yeah.
Number two, Iran's part of that whole deal. They've finally gotten a chance to pump oil, and they're going to pump as much as they possibly can. The Saudis don't want the Iranians to get the jump on them and take market share from them, and the Russians need the income. So how in the world are they going to cut anything? So, given that situation, given the glut of oil worldwide, U.S. supplies are 36% above our 5-year average for crude oil. So, I mean, in spite of this small downtick in production, which is somewhat positive, there's still a lot of oil. They're still going to pump a lot of oil. And then you throw into that the turbulence of global demand and potential economic problems, troubles in China, a recession in the manufacturing sector, which is a big consumer of petroleum products. And I don't know, that doesn't answer your breakout question, but I just think going up is going to be pretty difficult.
And so really it sounds like between those two factors, probably not much of a chance of a breakout either way.
Right.
We're kind of stagnating down here, call it 25 to 35 for the foreseeable future.
Right, that's the way it looks to me.
Take missiles to change it.
Something's going to have to, production drop or the world economy straighten out soon, which doesn't look likely. So I don't see how it goes up a whole lot for a while.
Okay, and I've got one final question for you. I was talking to some cattle producers earlier on Friday, and they were concerned about the difference in basis between cash cattle in the north versus cash cattle in the south. Do you have any thoughts? I mean, will that fix itself at some point? Do we arbitrage in cattle north to south? What do you say?
I think you just have to take that into consideration when you're hedging cattle and understand that maybe you're just going to have a different basis than somebody. And that's always true. I don't care whether it's grains, cattle, hogs, or whatever. You have to fine-tune your marketing to whatever your basis assumptions are for your particular area.
And we're coming off this massive demand grab for cattle, so now basis is starting to play out.
And if you have differentials there, then you got to factor in transportation and all the other little goodies that go into how you arbitrage between those two. And apparently they're not that far out of whack, or they would be getting corrected.
Sure, you'd see guys buying cattle and shipping them south.
Sure.
Flipping them.
Yeah.
All right. Well, Tom, thanks so much for taking the time to join us.
Right.
Appreciate all your thoughts.
Thanks, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.